Mic check and screen share check, please. All righty. Thanks for your patience. Let's go ahead and get started with hybrid portfolio, the 30-minute charts. This is the strategy podcast for October 2nd, 2023. And are we recording? Yeah, okay. And we'll get started with Alcoa. So last week finished with a nice run up, testing the previous high. It rolled over at the close of the day. It opened lower below the dragon, took the short, took a routine 1R, and I'm looking for this to be a zero state entry, either a kata 2 to the upside or a collapsing dragon to the downside. Clear price targets in both directions. That one should be a live trade tomorrow. AI initiated the short on a collapsing dragon and also a kata 2 on the way down, about 90 minutes into the session. Took a wider stop. That's holding 1R. I'm looking for that to come back and test 2350. So I think there could be some more weakness in that tomorrow. Amazon initiated a kata 2, holding it overnight. Caterpillar, no trade, missed the short. Cliff, no trade, sideways quiet channel developing. CVS, I missed the initial sell-off here. I mean, this just missed this one, missed the morning hook, and missed the kata 2. So that was just, that's the one that got away. I like that tomorrow, the fact that it held support where you would expect. That makes 70-40 in play. So you could see that move easily. If it breaks above this, then this is not much resistance at all. You don't get any resistance until here. So there's actually a nice two-step move available on that tomorrow. By the same token, if it fails below that last 30-minute low, then that's a legitimate short with the second position on the collapsing dragon. So I expect CBS to be in play tomorrow. Dish short on the pocket entry. So it's not a collapsing dragon until it gets below this. So this, anything in here would have been a legitimate collapsing dragon, and that's still valid. I mean, if it fails tomorrow, you want to be on the short side of that one, quick, fast, and in a hurry. But this particular entry, I want you to just notice this area under the hill. You know, if you treat the treat the dragon as this hill like that, right? And then you put your support level right here. This region in the middle, this region in here, is what we call the pocket. And so this effort to get short here, price had gotten through the dragon, and I want to front run this collapsing dragon. So I've got this much gain in hand already, right? So as this thing got weak the rest of the day, I've got that much. I've got that much in the bank, and then I can add a second position on the collapsing dragon. So that's the structure of a pocket trade. It's like a kata 2 short, because you have a high and a lower high, and then this is rolling over and crossing the dragon. That makes this a legitimate short right in here. Rather than waiting for the collapsing dragon to confirm the move, I'd like to be in the money that much. And then when this thing starts collapsing, I can get my second position on and lock in bigger gains. So that's what we mean by the pocket. Devon Energy, oh man. Where do you see Tim's intraday trade on this one too? This was nice. So this is, here's your collapsing dragon. Now again, notice what happens when the support level and the gap up collapses. This area in here, there's no resistance at all. You don't get any resistance until you hit this. And that didn't hesitate there much. It continued to collapse. And then you check this one. There was a little bit of support, but then when that collapses, notice how fast it falls when all the support collapses. So on that first collapsing dragon here, all you need is that much risk. 3, 4, 5, 6. So this is holding 6R on one position. Notice that you get rewarded for the early move by banking 4R before it even violates, the obvious resistance. That's the advantage of going early, is that when it works, you get a nice big payoff. So that one's going to be in play for tomorrow, as well as a continuation. Electronic arts, no trade. Emerging markets, no trade. Ethereum. For those that can trade the currency directly, there was a beautiful dragon horns up in here. And then it collapses. When that rolls over, you can get short either here or here, and you get that nice move. And it's below the support level. And notice what happens at this support level. It tries to hold support for a little while, and when it collapses, you get that big move. So that's the argument to be in favor of front running that statistical measure of the belly of the RL10. So anyway, ETHE, no trade for me today, but that's in play tomorrow. Mexico took the, now you should be able to see the pocket based on that last scribbling that I did. So that makes this area under the curve. That's the pocket. So that is a pocket short, also like a kata 2. And then here's where the collapsing dragon kicks in, and then notice you get that nice big harsh sell-off. In retrospect, I think the legitimate exit should have been there. Or if you take that exit, I'm not offended, because then you get this move, you get 1, 2, you get a nice 2R and some change, no overnight risk. I let too much of this get away. I'm only holding 1R. That was just span of control and lack of attention to detail. Unnecessary risk. So don't do that. Basically the same trade here in Brazil. There's going to be your collapsing dragon. There's a pocket entry in here. This is really the pocket entry against that collapsing dragon. And so we're holding about +1. And if this rolls over, you can get short again on the violation below 30. and then the second position below 29.70. So that has all kinds of gains. And, on that one, you're hoping to see that similar move. And then you notice the highs, the lower highs. And then here's your primary support. That's what sets this up as a pocket. And there's your collapsing dragon. So this is all gravy if you can get short inside there. Checker hold. Intel, no trade. This is showing some weakness here in tech. This is one that should have gone if it was going to go, but it didn't. And now you got this 1, 2, 3. And if that fails, then it's coming right back to here. There's your target and your gain. So if you can have a small risk, you could get a 3-bagger and then another 3 down to the 10-day low. So that's setting up for some violence to the downside. IP, I missed the COTA 2. Real estate, I took the collapsing dragon short. So there's your support. There's the collapsing dragon. Big time collapse. Now it also violated below there. So on this one, I'm not offended if you take the exit here. That's a good exit intraday because you can bank 3R, but you would want to be ready to be short again if it fails, and certainly if it fails below the 10-day low, you want to be ready to be short. On the other hand, because the R10 is rolling up, there is your entry for an SSC. The argument for that is you might be able to get this kind of a move up to 79.50. So that would be an SSC. This would be your collapsing dragon. So IYR is definitely in play, and you can see it's in play because of the larger swing move. Real estate, regional banks, beauty. Probably should have gotten the second position on this one. But yes, this was yesterday or Friday's, and then it closed poorly, and today that continued. Here's your collapsing dragon. So this is a COTA 2 short because it front runs that collapsing dragon. This would have been a legitimate second entry here or here, but as it stands, I'll take 1, 2, 3. We're holding +3, and it's right at a key support level. So if this fails, there's no support over here whatsoever, and that thing fails further. Mattel took the COTA 2 supported winter crossing short, captured 1R, took the dragon exit. I talked about that this weekend in the lecture series. So it comes down in an orderly fashion, finds support, comes back, and now all you're doing is you're tracing the edge of that dragon, and when it gets to there, bang, you take it, and that locks in 1R, and good to go. And this is setting up, of course. Once you start seeing this, you can't stop seeing it. That sets up as a 0 state from a critical state because of this support. Like you're not allowed to be surprised if in one day it gets back to here. And if that's your risk, there's 3. But you're also not allowed to be surprised if from this price level, it fails like that in one day, which means the 10-day low is in play, which means if that's your risk, so set that up now. McDonald's, standard short, collapsing dragon, 4R in hand, no support in sight. This is one we wonder, how far can this go? Let's jump out to the day. Look at that on the daily now. That's when you trade these intraday, you just tap into these larger secular moves. That thing is already past this entire support level. That's what today was the first day voting down. Look at the, it opened and sold off all day and closed. That was one giant directional move because the support level broke. Where's the next support level? And remember, all the people that had that as their stop were the people that were buying this and who bought the dip and who tried to buy the dip twice and it kept failing. And now they're starting to panic. So how far does this fail? Let's look at the 3-day. That's what free fall looks like. So Dragon 240, belly of the RL10 230. Where is the support level that's going to stop that from free fall? This is what chaos looks like. So some folks will say, that was just a shakeout move in order to run all these stops so that they can now do this. Could be. But I'll bet you McDonald's is in play tomorrow. It's just started into the winter. You need to see opportunity when it knocks on your door like that. Now, I want you to notice this move on the 3-day, which broke at about 284, which is about when the winter started. So if we come back and look at the 30, what does that look like? 284. How much clearer of a signal do you need to see that that thing is failing? Even if you waited for that collapsing dragon, short at 275 down to 255. So the 30-minute chart allows you to get a reasonable adaptation to large changes in the longer term seasonal moves. It makes you plenty adaptive. You don't have to be on 3-minute charts to make this thing work. You just got to be adaptive. 30-minute is the perfect blend. That 30-minute chart is the perfect posture in case you want to accelerate down to the 3 minutes for short term or out to the daily or 3-day for the longer term swing. This is the sweet spot that overlaps day trading and swing trading. This is the sweet spot, 30-minute chart. To one man's point of view. Sorry, I bumped the microphone. All right, Microsoft, I initiated the COTA 2 long marijuana. No trade. NVIDIA, no trade. PBW, the clean energy, that's a collapsing dragon. Smash. Holding 3R and more to follow. Rivian, PSAR flip reversal. I cashed 1R at a support level. The S&P mostly was down in spite of that last hour run up. Treasuries continued their collapse. Tesla, sideways chop. US Steel, sideways chop. And that's the hybrid trading workshop. I mean the hybrid swing portfolio, the nightly adjustment. Sniper trade of the day. The first one I just want to show real quick. Trading from owl to owl. So the owl is the generation 2 RLCO pattern. So RLCO patterns generation 1, we had pattern 1 through pattern 7, which we traded for about 5 years. And then we refined those into generation 2 because we had a little deeper understanding of where the better moves were coming from. And so we keep generation 1 as a way to describe conditions in the market because it's part of our language. We can use that for alerts or description. And then generation 2 gives you things like the supported spring crossing, collapsing dragon, Kata 2, Z3 pinch, emerging dragon, super pinch, the all-important super pinch, and the owl is in there too. It has five criteria, which we teach in the day trading course and in the foundations course. These yellow dots represent where the owl pattern, where all 5 criteria of the owl fire. So you have a harsh move, you have a regression line crossover outside the dragon, you have the RLXD, you have the dragon reverses, and you have the 30 period regression line rolling up. That gives you the owl. And then after this, as a general principle, if you just framed it down to, you know, either the bottom of the dragon or all the way down to the PSAR flip, then you get to participate in that move with a nice little buffer. And then here's where the owl flips over. RLXD, or I'm sorry, P1, regression line crossover outside the river, crosses the dragon, dragon rolls over, 30 rolls over. It's usually the RL30 is the last thing to trade. So in fact, one way to look at this is trading from the peak to the valley of the RL30. And then that gives you a directional bias, which is why we say the RL30, the slope, the direction of the slope is the health of the trend. And here's the turn, and here's the turn. So on this one, if you just waited for it to cross the intraday VWAP, then you might have just set up a nice relaxed collapsing dragon and VWAP cross with a standard unit of risk, cashed it, re-entered the collapsing dragon, cashed it, and you might have been happy just taking home 4R in 90 minutes trading between the owls. Here's the sniper trade of the day. This is treasuries, which are collapsing. Imagine how much money was lost in a market the size of the 20-year treasuries to experience that much gap. Here's your OR3. It gets violated right here. Here's your standard risk. 1 position, 2 position cover. So that gives you 3R on the first position, 1R in the second position for 4. Pocket, 1R. Kata 2, 1R. This might have been 2R here. Yeah, sorry. So 7R potential, just trading it in a relaxed fashion. Treasuries, for crying out loud. Here's another bonus sniper. This is what that Devon Energy looks like in one form on the 3 minutes. OR3, collapse, second position, exit, re-entry on the rollover, cut it, try the SSC, cut it, collapsing dragon, second position, cover. I saw it, didn't take it. So there was a ton of movement on that first move in Devon. It's like about 5R in there, not even counting the second one. All right, let's look at the traders today. Here's Tim. Tim is putting together a package of tortoise indicators for TradingView. We're going to have a meeting later this week or next week to just kind of go over and look for accuracy and completeness for those of you that are not TC 2000 or Thinkorswim or TradeStation aficionados, and you want to get a set of approved indicators and chart setups. That's coming. All right, so here's Tim, and I am just noticing how much more relaxed he is this day. Here's his prep work. That's his standard work now. And he sees the OR3, gets the short, manages it carefully, step by step, gets a 1, 2, 3 exit for 4.4R. Do you need much more than that? Nope. Pretty nice work. He picked up another 0.4 on Merck. Now this is the case in Merck where, the downside of waiting for the OR3 is sometimes you end up seeing a move like that and leaving it alone, even though your standard risk is here. So the idea behind the hybrid frog, which we teach in the advanced day trading courses, from the open, sometimes you can put that hybrid frog box on here, and then if it is directional and there's no resistance, you can get short here, and then that becomes an operationally significant trade. And then when it's that much in play, you can go to the low of the day and hang a frog box from the bottom, or a hybrid frog box, or an MMRB, and then you might get this move, or you might get a 1, 2, 3 entry right here, and that's certainly playable. But he does a nice job on following his script and brings home 5R for the day. Here's Brian. I would say a recent graduate of the Foundations course. He's pretty much through it. Gets his Z pinch breakdown. Gets paid for 0.6. He notices this, waits for that. I want him to take that. But he takes this, gets paid, sees that one gets paid. Oh, so that's 0.6, 1.5, and 0.9. So that's 3.0 and not even getting the fat part of the curve. So if that's 1, there was another 3R available in that one. And he's cruising along nicely with his rolling 3.36 expectancy. And this is a guy who was not trading the Forex at all prior to the Foundations course. Now, the Foundations course is not a Forex course, but it teaches you techniques that are applicable in the Forex, but also in currencies, futures, options, and ETFs. Here's Hamad. Brings home 0.4 net on this one. Is in the sweet spot where it matters. Doesn't get the continuation. Could have doubled. Devon, he gets a nice piece of that. Merck doesn't stay wrong too long, does get the fat part of the curve. Tesla, a little too choppy in here. I want you to really concentrate on what that RL10 is telling you. When that turn happens, okay, so he gets this one, and I want you to get the re-entry sooner. That was an emerging dragon. We could have gotten a 1, 2, 3 right here. But still, that's pretty nice. And now I almost feel like you're over trading this. But I understand it. It's a 1, 2, 3, and you're aiming for this. But I think you let that last too long. You gave back too much. I'd like to see you cut it there. This one too, 1, 2, 3 exit is here, not here. You gave back half of your open gains. So I want to see a little stricter on that. Don't let over trading allow you to take a generally correct directional day and attrition yourself into that. Okay. Uh, it's nice. Forgot to prepare and still gets 1R. He at least recognized, but this is where the entry probably was, which was a 2R. And then don't neglect. I want to see your written trading plan. I want to know why this is short. Why is that short? Or if this is long and that's the cut, I want to know the name of the pattern. I want to see your written trading plan. And I want to know, is this long? And why did we cut right there? That's not even, it didn't even get into the dragon. Why is that an exit? And I want to know why we're not getting that move. You're making trades, but I don't know why, so I can't coach you on it. This feels late to me. And that's why I want to see the written trading plan and what's the name of the pattern? Because if you're trading the PSAR flip, you're short from here. If you're trading the collapsing dragon, when you see this and then fail, you're short from here. So basically, this is where you should be short. And that leaves an extra R on the table. I love the exit, but I want to know what the written trading plan is. I wanted to just highlight something from the weekend reports, in other words, Friday last week's daily, to show how Tim had identified Devon as one of his primary targets. So Devon showed up on the daily tactical summary as one of the big losers for the day on Friday. On the NDX, it has been exceptionally weak. And then Friday, it was the second worst symbol in the whole stack. So Devon Energy leaps out at him for that reason as well. Devon Energy was number 9 on the trading value list because it has a 2.5% average daily range and a reasonably high frog quality number, which gives it a combined ratio value of 6. So it's right in the middle of this stack right here. Pretty good stuff. I think that was the last one. Yeah. So a case of being well prepared by selecting good targets from the daily report. All right, so let's look at the daily 150. This is forming some kind of compound critical state right here. Is it going to recover back to here and here and here? Or is it going to follow with a leg 3 down, in which case 410 is in play? 415 is in play, and then 410. So this is a compound critical state right here. With like 429 signaling an upward initiative, and then should probably red. What, 422 showing the downward slide. So there's about a $7 indecision range in this compound critical state, and $7 over 420, 10, 1%. So that's about a 2%, indecision zone. And once it breaks either way, then we're going to see what this market wants to do. This was not a vote of confidence today. So the baseline is locked in right there. If that fails, 415 is in play. If this holds, then 436 is the target. The PSAR. That's where the PSAR flip would occur. Yeah, easier to see on a 30-minute. Sideways volatile. So it came down from bullish volatile. So it's been bouncing around in those categories. This is a bad sign. Sideways and volatile. Look out below. And there's your Max Payne McDonald's that we looked at before. Those things got to stay in your memory as you're looking at that and you're making notes to yourself about prime time targets. I mean, McDonald's is a key indicator for the broad market. It's an area of safe buying for conservative, lazy fund managers who have to own the best companies in the world, along with 3M, Boeing, Goldman, and IBM. But now also notice that IYR real estate is suffering. So in the battle of great American companies, Microsoft and Walmart are winning compared to McDonald's and Goldman. So even just that much information can give you an edge. Big meltdowns in the Dow and in the ETFs. Look at all the ones that are on auto framers. It's a buyer's market. 30 different symbols, better than 2-to-1 on the auto framer. I made an extended argument in favor of why the auto framer is my primary point of view, my first place to look when trying to understand broad market conditions or when I'm evaluating a new idea. The first thing I do is go look at the auto framer and say, what can I get from just a mechanical short-term swing trade? The foundations course is worth it just to listen to this weekend's commentary. There's some squeezes. Notice so this is sorted by reward to risk ratio. These are all the ones that are better than 2-to-1. You got a lot of indexes in yellow and Tesla, and the S&P itself is at 3.7-to-1. That's how sharply down that sideways volatility is posturing. And then the ones that are in relatively good shape, the metals and the semiconductors in my short-term stack. This tells the tale right there. Big red. Cliff and US Steel are resisting, but for how long? I would also say Cisco and Apple. Microsoft, there's some tech leadership trying to make a difference. So be ready tomorrow on the Qs and XLK. That's where any of the strength is. So this thing gives you plenty of information about what the relative strength among sectors and leading targets are. All right, that's everything I got for today. Take good care. We'll see you tomorrow.